This is LA Weekly Review, June 14th. And what did the markets do this week? We had a big downside move if you were paying attention this week. That downside move was fairly significant, especially when it got going. We had a decent little bounce at the end of Friday, but small caps down 8% still on the week, almost 5% on the S&P. What's most interesting, of course, is what's been leading us doesn't want to give it up. NDX and NASDAQ. Gold has a nice rebound. Junk bonds sell off. You get treasuries getting a big move to the upside, and the dollar finally took a week to the sidelines. What have we got here? This is, the last 2 or 3 weeks we've seen this huge rotation. Question was, is that rotation going to continue? Was it just chasing returns? When you look at it from here, of course, what sells off the biggest? Well, all that stuff that's been going up the biggest the last few days, that's the ones that sell off. And so this is just saying, hey, all the stuff that was going up big, well, it comes back big. And that's kind of to be expected. That's usually what happens. And so I wouldn't put too much on it other than the fact that it's what you would expect and it's what took place. Let's look at the technicals now. Got a daily chart up, right? And we're looking at the S&P 500. We had talked about the ideal of a capitulation back here a week ago when we saw Friday spike higher. And then Monday, Tuesday, we just kind of hung up there. And then Wednesday, we got, or Thursday, I guess it is, we got the big move back down. So we actually had a higher high on Monday and then Tuesday, Wednesday. Gap down, big move down, lost 5+% that day, or right at 5%, and then got a little bounce. And it was actually an under over. You got less volume down here, you get under price and back over. So that by itself says, hey, you can get a little bounce back up. Now at the same time, there's a swing point low right there. You can barely see it. That's this bar. The top of it is that line that you see there around 30.90. That is the test on the way back up, right? If you can get back over that, you can get back to the top of the anchor bar and then the gap area. And so that's kind of what's going on there. That's the retest region that's holding so far. If we keep going down, this bullish retest region, which broke out here, right? That's the breakout. The retest was there. That was the first. It would be the second retest if it hits it. Now, if you go beyond that, you've got all these swing point lows lined up. And as you come down, if it does, you're going to break a lot of swing points on the same time frame. And that's why if we get some sort of a bounce, or we just could get a continuation down, it becomes problematic. This is what happens when you go straight up and you never really take a break. Now, although you could argue a break was taken in here, that's why you got all the swing point lows. And so this is kind of the congestion area before the last leg higher. Now you come back quickly, you take away all these gains, and you're back to that same area. If we pull it in, this is what I was just talking about, right? We're expecting this to be the capitulation top. You actually got a higher high the next day. That particular day, we saw the NASDAQ, the NDX both go to 10,000, right? Hit their round numbers up there. And then you pause, kind of, drift down and boom, right? Nice big hit to the downside. Under over at the end. The first thing, if you're going to be bullish, right? The first thing is you got to get back over this swing point lows high. And so that's 30.8107. You got to close over that. And then you got to get over the top of this and close inside the gap. That's 31.63. If you do that, you're probably going to get new highs. So that's, it's not guaranteed, but that gives you a shot at getting new highs. Now remember, there is a lot of volume on this bar. And so really, to get over it, I just misspoke. You got to get over this, but then really to get to new highs, you got to get over the low of this, which is 31.6384. That's the big volume bar. On a weekly view, same thing, S&P, right? We close over the breakdown of the anchor bar, right? that would give us new highs probably, and that's 32.59, or at least that would give us a shot at new highs, and that's something we have to be watching on the way back up. On the downside, the bottom of that same bar, that big anchor bar, that's probably serious support at this point. And so you'd have to close under 28.55 probably on the downside to, to stick a nail in the coffin of this big advance that took place. If I pull it back and look at the weekly, that 32.59, the breakdown, the anchor bar, that becomes the next target, right, which is down here. But we would probably want to see, if you look at this, you got the ABCD structure on the way up. You probably want to see it under here to stick a fork in it. So it really isn't there. It's a little bit lower. It's underneath that May. But if you get under the 32.59, close under it, and you hang down there, you're probably going to break lower. That C point is a key spot, which happens to be the low. Now, the other thing to realize here is you already have 4 weeks after this low. This will print a swing point low if we stay up here for 2 more weeks. So if we just drift down, or if we bounce up and then start back down, or however it happens, that low would print, and that low coincides with all those lows we looked at on the daily. And so a break 2 weeks from now, where this prints as a swing point low, you'd have multiple swing points breaking on multiple time frames in that area, which would project much lower if it happens. All right, NDX. Now, if we talk about all the potential for stuff on the bearish side on the S&P, and you got to remember, S&P still been quite bullish. It did get a big setback, but could simply go right back up where it was. NDX, on the other hand, the setback is minor. I mean, all you've done so far on a weekly is you come back in to do an immediate retest. Here's the breakout, to do immediate retest regen off of this bar. And so far it's held. So you spike up, you hit the 10K, you come back down, you close 1% down on the week. But so far this is just a bullish retest regen. And to change this, you got to get under this and close under it. So I think this number becomes an important number on the NDX as we go forward on a weekly basis. Now, if I scoot back over here, we're only down 1% on the daily, as I've been talking about. The key boundaries here are kind of lined up. You got to get over that gap down bar, which is here, or which is the 9978, or you've got to get under the 9577 on the downside to get something going to seriously jeopardize this weekly. So, these are boundaries. And why am I doing so much on the boundaries? Well, it's always a test, right? Neoclassical is always looking at tests, and we want to see how those tests are tested. So if we come up, let's say, take an example, let's say Monday morning, this market goes bullish, and Tuesday, or however long it takes, it goes back up here and it tests this area at the 9978 and fails. That could be the spike down, the bounce that rolls back over, right? And so we would want to look at that area, and how you play it is all about money management and risk. In other words, one could short it as it hits that and have a tight stop up above. Now, this market's been extremely bullish, so this is kind of a higher risk play that you might get stopped out, but that is a potential trade. Another potential trade is you don't do anything, you let it get over this, and then you get long because you expect it to break out and make new highs. Just depends on how you want to trade these things. So what's the bottom line? I want to tackle what we don't know. We don't know yet if that was capitulation. We suspect it was, but we don't know that. And the capitulation we're talking about is the one we talked about last week, where the short sellers, right? They just got shifted and just pushed straight out of their positions, right? And so they take them up, and just make them give it up. And then you get the capitulation type move, the fast move down, which is what we saw last week. And so that looks like what it was, but we won't know that until what? Until we get a failed bounce. In other words, we go up, we capitulate, we come back up, and there's no new buyers to take this to higher and higher highs. That tells us the buyers all the way up over here were just the short sellers that were covering, right? Creates the vacuum. You try to bounce it, you can't, you come back down. And typically, that's the way you know capitulation took place. Big volume escalation, short covering. The short-term momentum, especially on the NASDAQ, right, that could just keep this market going either to the upside, or even if we're topping out, it could just be chopping for another week or two. So we don't know if that's the way this is going to set up, because we have so much retail trader euphoria taking place now. I mean, just on Friday, of all things, they're doing a pre-bankruptcy stock offering by Hertz. In other words, we're going to issue stock in a name that we know the stock is going to be worthless in just a matter of days, probably. I can't even imagine something like this taking. I don't think it's ever happened before. The bad thing about it is now, if it's allowed, if the SEC doesn't step in, if it's allowed, now you're going to see all these other companies that are in the same position, right? They're going to offer up stock in a bankruptcy, or just about as they're about to go bankrupt, right? They've already declared Chapter 11. They've already filed the paperwork, and now they're going to do an offering. So they're going to dilute existing shares with new shares in a company that almost certainly doesn't have the market cap to make those shares worth anything. In other words, the debt that's overhanging it is greater than the amount of money they're going to raise. So everything they're raising essentially just transfer from whoever buys this stock, right, to all the debt holders that are over here. So all you're going to do is just hand the money over to these guys. Insane. Every day, these small retailers, I've been doing momentum stocks and watching them, building things to look at them. Every day they run these things up. Every day I see stocks up 100, 200, 300, 400% on Friday. This frenzy that's taking place reminds me of what tops look like, right? Because usually the trader mania that takes place is a signpost that you're at a top. So I would argue that the way this looks is this looks very topish. At the same time, we've had a big, strong trend, and until we know whether it's capitulation that took place, in other words, we get the push, the bounce that fails, and the rollover, right? We don't know what that case is yet. What do we know? We know that earnings are going to be horrible, right? On the fundamental side, there's no way to say that anything is good. I mean, seriously. I talked about this when this first happened back in March. Demand was going along up here. You get this huge drop, and you could look at it as GDP. You're going to get a bounce, and the bounce is going to level out somewhere lower, and this difference is a recession. It's no two ways about it. It's a recession. We're already declaring a recession, but this is a recession. And, it's just how far does it level out? Is it down here? Does it get very close? Right? This is the question. What we do know is that this has happened. And I doubt we're going to see any of these companies do well. I suspect there won't be any warnings leading up to it. So this is 6 weeks out. Actually, it's not 6 now. It's about 4 weeks out before I believe this starts to hit. So about a month out. No warnings probably. Usually you have warnings, but nobody gave a forecast, or a lot of them didn't. The majority didn't. They couldn't see clearly because of COVID, so they just didn't give forecasts. So I suspect you're going to see some horrible earnings come in. COVID, this is not going away. We've opened back up, and yeah, we're doing all this stuff, right? But this V-shaped spike we're talking about, it ain't going to happen. And I'm talking about a V-shaped spike in the economy itself. It's going to level out somewhere lower. All of this travel and leisure, these guys are toast. Right? All the suppliers of them are probably going to be hurt significantly. And so this accounts for probably, I don't know what the exact numbers are, but I suspect it's 20% of the GDP or so. And so I can't see how this is going to come back anytime soon. And that's one of the reasons this demand over here on the GDP is going to be a lot less when it finally levels out. Now we know that on the political side, the administration is going to pump this whole V recovery for political purposes, and I understand that. And the reason they do that, of course, is they want to get elected. So what are they saying? Well, towards the end of the year, right? So 2001, right? Out here somewhere, you're going to see this 2021, right? You're going to see this economy, go back better than it ever was before. And that's, it's always going to be after the election. And yeah, we're going to have this big thing. We're going to shoot right back up to even higher heights than we were before economically. And one could question whether economically we're that well off. I think we were heading for a recession anyway, but that's a different question. But the administration guaranteed will pump it. The central banks will constantly remind us, right, that they got the power and they will act whenever they need to, for as long as they need to, which is exactly what we heard again this week. And so they're kind of the backstop, right, that says, hey, go ahead and take risk. We're here. Another negative is that the trade among the nations is way down this year. And this is one of the reasons I think we were heading into recession anyway. This reminds me of if you go back and look at your history, you had the roaring 20s that took the market to heights it never saw before. You had the Great Depression come in, the huge sell-off in 29 in the stock market, and then you had this huge climb back up. People forget that this climb took place, and it took place over about a year or two. And then you had the Smoot-Hawley tariffs come in and just tank everything to even lower lows. We are doing that already with all the trade stuff, right? We're taking cheap products that we used to get, and we're saying we don't want those cheap products anymore. We're going to bring everything home. We're going to bring the supply chains closer to home, etc. And maybe that's what should happen, but this is a negative. It's a big negative. And so you got a lot of fundamental negatives. Earnings, right? The COVID hasn't gone away. The administration's going to try and pump so are the central banks, but you got trade going down. These three, right, are huge negatives. And they're not, I don't see them going away. I don't see trade changing. I don't see COVID going away for at least another year. I don't see the earnings improving as a result of these things. These are huge negatives. Long-term, stocks going to depreciate to match the GDP. I mean, there's this question right now where stocks are doing this and the GDP is doing this. So which one's going to change? Is the GDP going to go up and meet the stocks, or are the stocks going to come down and meet the GDP? Well, this is what happens. Stocks come down, not GDP comes up. Maybe you'll get a lift up here, but it's not going to get back to where it was, as we're talking about over here. That's going to lead stocks to correct big at some point. But right now, you got the euphoria that's pushing things on the hope that all this is going to work out. Moving to the fundamentals, I don't have any politicals again this week. I keep looking at the fundamentals. The Fed really didn't do any positive surprises. As a matter of fact, it was negative last week's data. They say unemployment is going to be 10% at the end of the year probably, or somewhere near it. GDP going to be down. I saw numbers from 4 to 6%. I didn't actually read the minutes, but or the release, but somewhere between 5 and 6 it looked like they were talking about. Sentiment actually a little bit better than expected. This is the hope, right? This is the hope that these things get better. Next week, we're getting far enough out. Remember, the timeline here. January, China started having their problems. February, the world started noticing. March, the rest of the world started having problems. Right now, we're out, April, May, and we're out to June. And what happens now? Well, we're over all the close downs. We started closing down things at the end of March. So we closed down here in April and part of May. The June numbers are now going to reflect the attempt to reopen that started taking place here through the 1st of June. So you got some numbers of, startups. And by July, right, we're going to have some real numbers to look at to see whether that V shape in the economy is really taking place. So this is the first look, and that's why I'm starting to look at these numbers. Retails, the Germans, industrial production, so what the Germans expect, the industrial production numbers here, the Philly Fed, all of these things are going to give us hints as to what this V looks like. You know, is it really a V, or is it more like a, you know, an L type thing that levels out much lower? Earnings 4 weeks out, right? July 14th. Last week expectation was that we would probably end higher. It was really the worst case scenario. So strange year, right? 9, 6, and 7 in terms of trying to call this thing. We didn't get that gap up. We did push a little bit higher, like I said, and then we got the pressure and took us all the way down to the 29.91 target. And here's the way it looks this week. I suspect what we're going to do is we're going to try to push up. So the base case is the black here. I think we're going to try and push up to this area and probably fail. That will get us, more than likely, that will close over the swing point low, which would say that we continue to chop around, maybe a little bit lower, but chop around in this topping area. And so I would expect something into this high on the gap down is probably where this market turns, comes back down, probably holds the lows for now. Worst case, you don't even get that. You just push down, you test, and you give it up, and you go to the next level, which is down around 2,900. Best case, you push straight on up, and you close the gap, and you eventually go make new highs. And that's the way it looks this week. Have a great one. Stay safe. Take care. I'll see you next time.